Alright, one thing I wanted to point out, that situation is when you get a gap and primarily opening reversals. So looking at today, we had a gap up and went up for 3 bars and then we started to pull back. Anyways, so somewhere in here it's probably always in short, but one thing you have to think about is number one, look at the bear bars. Bear break, bad follow through, bear breakout, bad follow through, bear breakout, bad follow through. It's disappointing. It's not necessarily bad follow through, but it's very disappointing. The bears want to see bars, consecutive bars that look like this. So you have to think about opening reversals are very common. And by the way, you might want to. My laptop mic is working again, and I still have yet to buy a new mic. I'll do that at some point soon. So this video could be very loud. Anyways, you have to wonder why do opening reversals happen? Well, I think one, Al mentioned it, and I really think that one reason is the bulls cause it in this case. So how so? Well, the bulls want to buy as cheap a price as possible, as cheap of a price as they can, and I'm talking about institutions. So when we gap up, one thing to think about is we close the gap here, so we may close this gap here. So when we gapped up, few problems. Number one, we're very far away from the moving average. We'll probably have to get to the moving average as I talked about yesterday. So buying above and putting your stop below, it's an okay strategy, but you have to be prepared to get stopped out and buy again. Well, to me, today was very interesting just because, what do the bears do? And I actually even asked Al, what do the bulls do? You buy above, maybe you get out here. A lot of bulls get out here. Why? Or how do we know this? We'll look at the next bar. It's a give up bar. The reason they'd get out is disappointing. The bulls had a chance to, get 905 to close on its high, and they failed. They could not. And we've got another bear bar, so we're probably going to test this low and go lower. So this situation happens all the time, and that is you get a strong sell-off. It looks strong, and by strong I mean a lot of consecutive bear bars. But when we look at a 15-minute chart, you can see on the 15-minute chart that really it's just a pullback. So let's look here. My whole point behind this is this: the bears, when you have a gap up, the moving average is always support, and the bears have to break below it strongly. And the issue is bears who sell are going to be very quick to get out, probably above this bar. And although it's not a great signal bar, here's why they'll get out. The reason they'll get out is because this is a pretty weak sell-off. It's a lot of bear bars, but it's not that strong. It's not this. Look right here. Opening reversal. Here's an opening reversal. It's kind of the opposite, but it's the same. Opening reversal. Decent bull bar. Another bull bar. Another bull. These bull bars are closing on their highs, which means bulls are buying into the close. These bear bars are not closing on their lows, which means there's buying into the close and not selling into the close. Here, there was buying into the close and not selling in the close. So the whole point is bulls are continuing to buy into the close. Bears are not continuing to sell into the close. So this looks like a leg in a trading range. This looks like a leg in a trend, which developed into a trading range. So anyways, the reason bears will get out here, probably above this bar, is because they know they will probably need a low 2 short. You know, you have to think about it this way. If this is not a strong trend or a breakout or a strong breakout, it's a channel. It's kind of, you know, you always have to question, is it going to be a weak channel, which means very deep and disappointing pullbacks up to here, or a trading range? In this case, you know, it's more of a trading range that could be, you know, a bull trend. We could easily just keep channeling up the whole day. Right here, this is a lot of bull bars, pretty strong, and you know, the bears shorting here, you're probably going to lose. You know, what's going to happen, even if we pull back to here, we'll probably find buyers. So anyways, I'm going to get off subject with this. The bears know this is strong enough so that the low 1 short will probably fail, which it did. So they're going to get out above here and look for a low 2, but why did we get a low 2 here at 955 after three bull bars? This happened on I was looking back a long time ago in some of my notes, and it's back on March, I believe March the 21st. There we go, we're getting close to it. Ah, here it is. Well, yeah, it's kind of the same thing here. So, strong move up, opening reversal. We sold off to a new low. And as soon as we made a new low, we reversed up. Today, we reversed up at the moving average here. We just reversed up from the low. Strong enough bull bar so that probably buyers below this first low. So a lot of bears will get out above this bar because they know even if we get a low 1, it's probably going to get bought. We'll probably have to test the moving average. And that's what they did. You know, bulls bought this low, scaled in lower, made a profit. And this low 2 wasn't, you know, it was a bull signal bar making it a bad low 2, which made it a failed, you know, an opening, you know, another reversal. So anyways, let me see if I can find a better example. This isn't a bad one. You had a gap down, so a spike. And this right here, opening reversal, so our, you know, a reasonable buy, but not a great short because it's a low 1 short. And then here's a low 2 short below here. Bad signal bar, and then it reversed. Looking at today though, so you know, back to what I was talking about with a lot of bulls will buy, a lot of institutional bulls will purposely sell. They did that here and here, and they'll do it here. They'll sell to try and stretch the bears out as far as possible. You heard Al use the term an elastic band if you're in the room today. What he was saying is they'll stretch it out as far as possible to exhaust the bears and then buy aggressively. So why is that? Well, if something becomes too extreme and it's not strong, it can fail quickly. Here, this was kind of extreme. Bear breakout, and if you know, decent volume. This bar was on its low for a while and then immediately reversed up close to the end. Same thing here. Bears, bulls sell all the way down, and then as soon as we get to the moving average, they reverse and buy aggressively to try and trap as many bears as possible. And that's exactly what this did. It just trapped bears. If you notice, we got a lot of gaps. Here's a gap, this high, this low. Here's another gap, this low, these highs right here. And I believe we reached measured moves of this already. Here's the next one. So we're basically forming a small pullback trend day. So, you know, in conclusion, my whole point behind this video is when you get a gap up, there's always higher probability of a bear trend on in general.
Some bull scalpers taking.
So yeah, I had to pause the video, but the whole point about this, you get a gap up, moving average is always support. There's always higher probability in general of a bull trend. So when you have a gap up in a reversal, you really need, the bears really need a strong bear breakout to the moving average, and they need to break strongly below it, because if they do not, this is selling at support. So selling right at the moving average on a gap up is usually a mistake. Just look back at the day and see how many times that it doesn't work. Here's a great example today, and a decent. So we rallied up, had a pullback, had a retest. The bears got trapped, and we're testing the moving average. Here's a buy signal. We broke below it. Another bear breakout. So here we're probably going lower. We've broken below the moving average. Here, as soon as we touched it, we reversed up. Bulls will buy above it. So, you have to be careful holding short through this, especially at the moving average, especially when you have a credible buy signal here. Credible buy signal here. Some traders will buy above. Put a stop somewhere down here below the moving average, and they'll buy more lower. And you can see we retested back to this high. So anyways, what's today look like? It's going up. I would never hold short right here. We have a lot of gaps. We're in a bull trend, and it's basically a small pullback trend day. It's similar to this, but not as, it doesn't appear as strong, but it can go a very long way. So I would not hold a short. I wouldn't be short right now. So anyways, that's all I have. Thanks.